The Southeast Asian Homo PP market started the week on a stable note as Chinese sellers refused to offer any additional discounts amid the rising production and shipping costs. Buyers seem to have accepted the facts and, being encouraged by the high offers from other sellers, decided to turn to Chinese materials for the needed quantity. The market sentiment became tense after Russia launched an attack on Ukraine, triggering hefty international economic sanctions on Russia that is expected to impact the global petrochemical market. Despite the fluid development, buyers are looking at the uptrend in the near term, fetching support at least from the rising energy complex. By the end of the week, Chinese Homo PP yarn has been concluded at $10 per ton higher at $132 per ton in Vietnam. The domestic PP&P inventories in China have been piling up since the market returned from the week-long Lunar New Year holiday on the back of the sluggish demand condition. As of 7 February, the local stocks accumulated to 970,000 tons, up 60% from the pre-holiday period, and since 14 February, the figure remained above the 1 million tons threshold, putting tremendous pressure on local suppliers. Sinopec, in a rare move, offered discount schemes of 200 to 300 Chinese yuan per ton from the already low spot PP&P prices to entice purchasing activities, which helped to accelerate the stock movements, digesting 150,000 tons of inventories in the last 2 trading days of the week. With reduced inventory pressure, increased risk appetite among arbitrage traders, and mild panic buying from overseas markets after the breakout of the Russia-Ukraine war, export offers from Chinese sellers might move higher in the coming week. After a slight delay, a key Taiwanese producer has opened March PVC shipment offers with an increases compared to the previous month, but the gains are smaller than initially expected. The new price list sees an increase of $70 per ton to India and $50 per ton to China and Southeast Asia. Opinions are that the smaller than expected increases should not be a surprise considering the presence of Chinese cargoes at relatively competitive levels. In fact, the local PVC market in China continues to decline this week, shedding between 200 to 400 Chinese yuan per ton, partly due to the tight governmental control on the coal supply and also the slow to pick up demand. Chinese suppliers are expected to remain focused on the export ground, particularly to India, to compensate for the soft domestic market, keeping a high level of competition in the Asia region.